Well, while chip giants like Nvidia have boosted markets over the last couple of years, today the opposite is true. Nvidia is falling over 9%, dragging other semiconductor stocks down along with it. So where can an investor find value in the chip space? With just a few minutes left until the closing bell on Wall Street, we're looking at how to play tech and chip stocks with the Yahoo Finance Playbook. Joining us now is Cory Johnson, the Futurum Group Chief Market Strategist. Cory, it's great to see you, as always. So it has been an interesting day, an interesting week or so, an interesting couple of years in the chip space.
This day has been an interesting week if you're long semiconductor stocks.
I guess so. I mean, we've seen Nvidia obviously pull back a lot, and we've seen sort of the question become, what now? So I guess, Cory, let's start there. What now? What should investors be now considering at this phase?
Well, I think we've got to take it in terms of the long-term step away from what the market is doing today and think about what this means for the long term. What we've seen happen over the course of the last few weeks and months, but really weeks, since Jackson Hole, it is so clear that the Fed is going to start cutting, not just cut once. There are predictions as much as 8 cuts next year, which seems like a lot to me. But and I could explain why if you care. But more importantly, I think what it means is a move away from the Magnificent Seven that have carried the market thus far, and maybe looking at other companies that might do better in smaller and mid-cap regions. So you certainly see that in the performance, even within technology, which is more my purview, where you're looking at the smaller and mid-cap stocks. While those are also down in technology, they're only down about half as much in the last week as those big monsters that have really dominated the market. So we also see in terms of the numbers that if Nvidia is going to sell off a lot, the market's going to sell off. Just it's the way the math works. But I think more generally, you see investors looking at small and medium cap. They've got a thesis that AI matters. They've got a thesis, as you guys were just discussing, that there's going to be a lot more semiconductor sales in some new arenas than we've seen recently. But if you're not going to own the biggest companies, maybe there are ways to play that thesis. I hate to talk about the stock market in terms of play, but ways to apply that thesis to other stocks that aren't just 7 names.
Are there certain small to mid cap names, Cory, you call out that would be sort of examples of the trend you're talking about?
Yeah, and please do not mistake this for investment advice. You don't pay me enough to get my investment advice, and I like you too much to give you my sometimes errant investment advice. But I notice it in names that I follow. I notice it in names I don't. There's a company that I own called Coherent. Again, this is not a stock advice, but this is a company that makes networking gear that's used in telecom, which has been a lousy sector for a few years, and data centers and AI, which, as you may have heard, has been a pretty good sector for the last year or two. And if you look at the performance of this stock compared to Nvidia, in the last month or so, it's done better. It's kind of an amazing thing. It's up 26% in the last month, at least when I was looking earlier today, whereas Nvidia's up 5% for the month. KLA-10 Corp doing so much better than the 5 times larger KLA-10 Corp, not a small company, but doing so much better than Taiwan Semiconductor in the same period of time. And I think that these are not stocks that I own, but these are companies that I follow really closely, and I think they're putting up similar kinds of results, and yet the market is reacting quite differently.
So do you think we're seeing sort of a rotation in some cases from some of the giants to some of these small and mid-cap? Okay.
I think it's exactly what we're seeing here. And I think that the other thing that you're seeing is you're seeing some things shake out, and you're seeing investors try to figure out what it means right now. It's not a popping of a grand bubble, but there are certain stocks that have really taken it on the chin. And let me point out 2 of them. So SMCI, the Hindenburg report was out last week, and the very next day they announced that they can't file their 10K. We know that they've got a new auditor recently, and who knows what's going on behind the scenes there. But there are tens of millions of dollars of related party transactions involving family members and the wife of the CEO. That's never a good thing. I don't know if we need an academic study to point out that that's a risk factor that tends to underperform the other competitors in the market. And you certainly have seen that stock sell off like crazy. Now, another stock you've seen sell off like crazy is Elastic. I was on the phone with the CEO today, and it's pretty interesting. They're making some changes in their sales structure to respond to big opportunities they've got in AI. Their largest customers are growing at 3 times the rate of their smaller customers, which every business wants. But they hit a speed bump, at least in the quarter that they just reported, the guidance that they brought down. The stock got hammered. Now, I don't know if Elastic is a stock that's going to go up from here or not, but I know that they reported 18% revenue growth. A lot of the internal metrics of this company look really good, and yet to see the market kind of throwing out the baby in the bathwater right now. So what that says to me is that there's nervousness with investors trying to figure out technology, and indeed some investors new to technology investing, because that's a thing that's happening right now too. And so, where there's the hint of smoke, you see investors assuming fire in technology right now.
Let me get your take on another name we've talked a lot about, Cory, which is Nvidia, which got hit today. I don't know, if that's traders, investors still trying to work through that earnings report, Cory. I don't know if that's just Nvidia getting caught up in a broader rotation, maybe both. Dan Gallagher, though, over the Journal posed a question. I want to get your take on it. He says, how long can top customers keep pouring billions into AI when investors want to see returns on those investments and soon? How would you think about that question, Cory?
If investors wanted to see return on investment soon, I think that would be a great question. What we've seen from technology companies for decades is that investors don't want to see returns on investment soon. They want to see returns on investment. How many years and years and decades did Amazon go without showing an operating profit, let alone net income? And yet investors were patient with the stock generally. Now, it did have at least 190% sell-off in there. But generally speaking, growth investors and tech investors are willing to wait a long time until they see a return on investment. So I don't think that's the right question for these kinds of companies, that they want to see ROI right away. Now, do they want to see ROI? I wish that were true. I wish we lived in a Ben Graham, Charlie Munger, Warren Buffett world. But sometimes we live in the crazy buy, sell world of people who do crazy rapid trading based not on fundamentals at all, but wiggly lines on the screen. And so I don't know that the question really, that anyone's really judging the companies on that. Goldman's raised that issue with a note about 2 months ago that people are still talking about. You've seen those big stocks come off those great valuations. But again, I think I had this, really briefly, but I had this really incredible conversation with a CEO at dinner last week with the CEO of this Fortune 500 tech company. I don't know if we were on the record or off, so I'll assume we were off. But he told me that he was meeting with investors who are running big amounts of money out of New York who've never invested in tech or trying to understand tech for the first time ever. So presumably to me, these are people who are having to respond to the weight of Nvidia in their portfolio or in the numbers that they have to match, and suddenly having to learn things about things like software as a service and semiconductor design. Yep. That means there's new money in the sector. That means the new money is looking more broadly than just the big names. And I think we're going to see a little nervousness in that trade among professional investors, let alone the amateurs.
Cory, always great to have you on the show, my friend. Thanks for joining us.
Thanks, guys.